Do you remember that scene in Ferris Bueller's Day Off when Ferris convinces his best friend Cameron to take his dad's car out for a joyride? Cameron was crazy protective about that car. But hey, that's understandable. It's a Ferrari. But keeping your assets in one place and admiring them from a distance and hoping for the best doesn't always work out. If you happen to be parking all of your extra cash in your bank account and hoping for the best, then today's video may give you some other options with the same level of security. Which brings me to certificate of deposits, or CDs, which are offering up to 6% today. There are several different types of CDs which I'll discuss, and I'll provide the highest rates that are available in each of those types and timeframes. And as a reminder, CDs are a savings product that are offered from banks and credit unions, which provide a higher rate than a savings account because they require you to keep your money invested in the CD for a set period of time. CDs have an upper hand of the savings account with regards to the rate because it is a locked-in rate for the entire time frame that you own it, unlike a savings account where the interest rate can go up or down at a moment's notice. The biggest downside to CDs is that you're typically locked in for the set time period and you don't have as much access to your cash like you would with a savings account. However, you can cash in your CD early, but it has a tendency to have a fee that's associated with withdrawing it early. The penalty is typical anywhere from giving up 1 to 2 months worth of interest. But if you need your cash in a hurry, you can take the penalty and you can cash them in, but I'm going to discuss an option that skirts that penalty altogether. And you can also purchase your CDs from a brokerage site like Schwab, Fidelity, or TD Ameritrade, and these CDs are still savings products that are being sold from specific banks and the credit unions. The brokerage site is just a moderator that's connecting the clients with the banks. Overall, this means that the FDIC coverage up to $250,000 is still offered on CDs purchased on a brokerage site. And buying new CDs from a large broker like these don't typically have any fees associated with it. But always make certain to read the fine print because they can change their fees and their terms at any time. I often hear from viewers that use a local broker where they're often being charged fees for purchasing CDs and CD ladders. Always do your homework to understand your fees and your options from your specific broker. And another question that I often get is, can you buy CDs within an IRA? And the answer is yes, you can, but you need to review the details and any purchase limits of your IRA. A big difference between a brokerage site versus a bank is that you don't have early withdrawal fees. Instead, they have the option to sell the CDs on the secondary market. I cover the brokerage site CD process in depth in this video right here. If you are interested in learning the fine details of purchasing them on a brokerage site, then I highly suggest that you watch this video. Brokered CDs is far too much information for me to cover today, but I will state that there is a fee for buying and selling used CDs from a broker, and it's usually around 0.1%. Before jumping into the CD types, I want to discuss APY, or the annual percentage yield. This is a question that I get all the time, and it's important to discuss. Now, when you're scoping out CDs, you may see two types of rates listed. There's the fixed rate and the APY rate. And let me tell you that the APY rate will always be the higher of the two. The reason it's higher is because many CDs offer to have a fixed rate interest accrue daily and then pay out monthly. And if you keep that interest in the CD, it compounds and grows just like, I don't know, a chia pet on steroids. For instance, you might snag a CD with a fixed rate of 4.89%, but if you let that interest compound and grow, by the time your CD matures, your annual percentage rate would be 5%. But wait, there's a catch, isn't there always? When you're buying your CD, the bank might give you the option to have the interest paid out directly to you instead of letting it compound in the CD. And while it's totally your call, I gotta give you a heads up. If you take that interest payment, you're missing out on some serious compounding action. Please don't accidentally make that mistake. Now you might be wondering, why would the bank even have this option in the first place? Well, it all comes down to their bottom line. It's in their best interest to pay out the interest instead of letting it compound in the CD. It may sound sort of sneaky, but there's a lot of people out there that may want the interest payment coming monthly to subsidize their own income. So if you're new to CDs, just remember, the APY rate is where the money's at, literally. And don't let those banks pull a fast one on you with their interest payment trickery. Unless, of course, that's part of your objective to have monthly interest payments. Next, I need to speak about the taxes on CDs where you're going to be given a 1099 INT form. On a CD, the taxes is based on when you earn it, not when you withdraw it. So if you have a 3-year CD, you'll pay taxes in year 1, you'll pay taxes in year 2, and you'll pay taxes in year 3, even if you keep the interest compounding and growing in the CD. Now, I also want to talk about the duration of CDs and how they interact with your payout based on your APY. The annual percentage yield, or APY, is basically how much money you can expect to make in a year from your investment. Even if your CD is only for 6 months, the APY is calculated as if you kept it for the full year. This helps keep things consistent across different investments. It's sort of an apples to apples discussion. Here's an example. If you have a 12-month CD with a 12% APY without any compounding interest, it means you'll be earning 1% each month. But if you also have a 6-month CD with a 12% APY, you still earn 1% each month. So even though the CDs have different durations, they're both earning the same rate on a monthly basis, which equates to exactly 12% APY. In short, the rate of return, APY, is the same for both CDs, but the duration happens to be different. It's important to understand this so that you can make informed investment decisions on things like CDs, T-bills, and other items that have varying dates of maturity. Before I review the different types of CDs, I want to discuss the yield curve. Let's assume that we could go back to the year 2015, where the yield curve was considered normal, where the rates on bonds are plotted over time based on the maturity dates. The slope of the curve is more like an inclined hill, where short-term rates pay less and the rates on bonds maturing at much later dates pay more. But today we are the opposite of normal. We have what is called the inverse yield curve that looks like the drop-off from a half pipe. The rates paying in the short term are much higher than the rates that are in the long term. That's why you're going to see CDs that are offered at the 6 months or a year that are substantially higher than what you're going to get at a 3-year or a 5-year CD. That is not normal. But it is an opportunity to put some of your parked cash to work and earn a little bit more than just being in your savings account. So let's learn about the different types of CDs you can invest in and take advantage of this opportunity. It is hard to believe, but there are roughly 6 different types of CDs. The first is the traditional CD, like the ones that we've already spoken to. The next is the jumbo CD. They're often offered at around $100,000 or more and tend to be for longer terms of maturity. Jumbo CDs made sense when the yield curve was in a normal state, where the rates further out were much higher than what they are closer in. But because the yield curve is inverted, the jumbo CD isn't a good value today. The next is the no penalty CD, which is just like the name states. It has no penalty or fee for withdrawing the CD early. The rates on a no penalty CD tend to be a little bit lower than what you'd get on a normal CD, but they have the liquidity of just like a savings account. It's sort of the best of both worlds. And with a no penalty CD, you do get to keep all the interest that you've earned up to the point where you withdraw it. Next is the callable CD, which I am not a fan of. A callable CD is one that the bank tends to offer at a high rate to kind of hook you in, but then they can also call back the CD and pay off the principal and the interest to date, and then cancel your CD from that point forward. It gives the bank all of the leverage, and I try to stay clear of them. Callable CDs can be part of a normal CD, a jumbo CD, or any of the other types. You need to read the terms and conditions of the CD to understand if it's callable or not. And to be honest, some of the language from the banks makes it very difficult to know for certain whether or not it's callable. I wish that they all used a common form like what you'd see from a brokerage site like Fidelity, where they literally state if the CD is callable or not. I'll now move on to the bump up CD, which is like the unicorn of CDs because they are so hard to find. It's a CD where if the rates have climbed since you bought your CD, it gives you the option to increase to the new rate once or twice during the CD's life. And let me tell you, if you know of a good bump up CD, please drop it in the comments below because I haven't found any in a long time. And the last CD type that I'm talking about today is the add-on CD, where the investor can continue to add funds throughout the CD's life. This happens to be a great option to have if the rates on the CDs start to decline sharply. You don't want to buy a new CD at a lower rate, and if you have the add-on CD, then you can just add more funds to this existing CD at the higher rate that you originally purchased. So there you have it, 6 different types of CDs to choose from. And while I won't go too deep into each one of them, I hope that you're feeling a little bit more educated about the different options that are available to you. And if you've ever had a CD called up before, please share your experience in the comments, as we'd really love to hear about it. I'll begin with the best 3-month traditional CD rate offered today at 4.9% from Newtek Bank, where there's a minimum deposit of $2,500. Newtek has been around since 1963, where they are publicly traded on the NASDAQ as NEWT, and they are FDIC insured as well. If you happen to be shopping around for a new bank, they also have a savings account at 5% with no monthly fees. As a comparison, I'll show some big bank CD rates as well. Ally's 3-month CD is at 2% with no minimum. Capital One doesn't offer a 3-month CD, and not to be outdone, Wells Fargo comes in at 0.5% for a 3-month CD on anything under $100,000. If it's over that, you get a whopping 1.01%. And when I looked at brokered CDs on Fidelity, the best 3-month was from Bankwell Bank at 5.05%. And if you're interested in no penalty CDs, the best 3-month rate is from the 𝐓𝐨𝐩 site, and it is from the American First Credit Union at 4.9% with a minimum deposit of $1. I do want to be very clear that the 𝐓𝐨𝐩 is an affiliate link for me, but they are not a sponsor of my videos. They do list out some of the best rates that I could possibly find on the no penalty CDs. 𝐓𝐨𝐩 is sort of like a broker that's going to match up customers with banks, offering better rates on items than if you bought them directly from the bank. Why? I don't know. In this case, you can buy this no penalty CD without having to be a member of that credit union. And for the 3-month CDs, it seems wild to me that this no penalty CD is the same rate as the traditional from Newtek Bank, but the no penalty only has the minimum deposit of $1 versus $2,500 with Newtek. The win goes to 𝐓𝐨𝐩 and the American First Credit Union at the 3-month CD. And please, know that when you see this video, the rates probably would have changed. I'll have links to the top CD rates in the description below. And like anything else in life, get it while you can. Before moving on, I have a favor to ask of you. If you like my content, I'd greatly appreciate if you consider pressing the like button so my content here on YouTube can grow. And better yet, I'd love it if you'd consider subscribing so you can be up to date with all of my latest content. Now on to the 6-month CD offered today from CIT Bank, which is offering the top spot at 5% with a minimum deposit of $1,000. The 𝐓𝐨𝐩 site also offers a 6-month CD from Axiom Bank at 5.15% with a minimum deposit, of course, with the $1. I didn't lead with 𝐓𝐨𝐩 CD because, well, I didn't want you to think I was giving it preference. From here, we have Ally at 3.4%, Capital One at 3.3%, and Wells Fargo is 2.5%. And the top brokered CD was from Associated Bank at 5.05%. And the top no penalty CD is from MPH Bank on 𝐓𝐨𝐩 at 4.92%. With the 3 and the 6-month CDs covered, let's shift out to the 1-year CD with the top spot for the traditional CD going to ClearPath Federal Credit Union at an incredible 6%. They're out of Burbank, California, and they've been around since 1954. I tend to stay clear of credit unions in my videos. However, anyone can become a member of this credit union simply by donating $5 to the charity that's listed on their site. There's also a list of employers in the California area that if you work for any one of them, then you can join straight away. If you plan to invest a lot of money in CDs, this could definitely be worthwhile for you. But as a heads up, the minimum deposit is the highest of all the CDs today at $5,000. With regards to the big banks, Ally is at 4.5%, Capital One is at 4.15%, and Wells Fargo is at 1.5% for anything under $100,000, and above that it earns 2%. The top brokered CD at 1 year is from Goldman Sachs at 5.05%. And when it comes to no penalty CDs, CIT Bank has an 11-month at 4.8%. But if you want the full 12-month CD, FVC Bank on 𝐓𝐨𝐩 is at 4.8% as well. Now we'll move right along to the last CD today at the 2-year mark with the top traditional CD rate going to Bread Savings at 5%, where it has a minimum deposit of $1,500. Ally Bank doesn't have a 2-year CD, but they do offer an 18-month CD at 4.8%. Next, we have Capital One that has a 2-year CD at 4.3%, and Wells Fargo doesn't offer one at the 2-year mark either. The top brokered CD goes to Morgan Stanley at 4.8%. And unfortunately, I was not able to find a no penalty CD at the 2-year mark. That wraps up the 3-month, 6-month, 1-year, and 2-year top CD rates that are offered today. Let me know in the comments below if you'd like me to include CD rates that go further out than just the 2-year mark, or let me know if you'd like me to dig further into any other topics. Thanks so much for watching.